Well, happy Friday, everyone. Hey, it's Shooter or Scott Henderson. We are going to go over primary waves, going to go over the global trend ETFs for October 2024. Of course, at the end of our presentation, please do review our disclosure. All right, let's start off with Renaissance IPO. Now, we're now just batting our heads up against resistance, just a little bit below 45. So, we might reject here a little bit, but I think the 23.6 holds no matter what. But here it says we break out. Now, we have another resistance band that occurred here on our back test, right around 50 bucks, which is where our primary wave 3 is. Now, it says it's pretty shallow here. However, if we get above this second resistance band, I would expect us to push up to the 61.8 pretty quick, and then this primary wave 3 extend. That's just my thought. As far as entries on this particular beast, on any pullback to about 42 or considering buying the breakout at 50.37. You could also sell some cash secured puts at 42.88. Let's take a look at Wisdom Tree India earnings. Now, India should start doing really well. They've been a huge benefactor from China's slowdown, or at least U.S. manufacturers pulling out. Outside of Mexico and South Korea, I think they probably are the biggest. Well, maybe even a couple outlying Asian islands there have done well too. But we're looking for a back test maybe to about 47.87. That would be your next entry, or around 47 if it goes a little below there. If it does, it's a buying opportunity down to the 61.8 at around 44.79. Then we should head up for our intermediate wave 3. Now, our primary wave 5 is not, our intermediate wave is not that much higher. It's around 60 bucks. So, we should have a decent drawdown at that point, probably back to about 49. So we're really pushing this for maybe, 8 or 10 or 12 bucks here from where we are is what my thought is, at least according to the count. Now, obviously, if India starts to prosper more than that, it'll do better. So let's take a look at Australia, MSCI, iShares. Now we're right at the breakout line here. Just rejected it right here. And really, we're holding up well for a rejection of a breakout line. Usually it comes back and touches that trend support. The only thing I don't like about this chart is that we've broken below the trend support channel twice. So we get below that, I'd probably cover, because there's a good chance we're going to come back down to about 20 bucks, is my thought. Just looking at the roll of the count. So if we come over here and roll back down, 21 would I think would be the best. But any back test to about 25, some cash secured puts, or start scaling in at that point. And ultimately, we are looking for a target to the upside. First, our intermediate wave 3 around the 100 fib at 30.59. Then we get a back test, which should break below the breakout again. Then we keep going. So this is going to take a little nursing, as far as staying in it, because it should be a little choppy in the zone, just because we're pushing near all-time highs. All right, let's take a look at DGS. Now, actually, where resistance is at 55.14 right here, we break above that. There's nothing up there, really. I mean, we should have a nice push. There really is no resistance up there. Then once we get up towards our 63, we should have a back test. So really, any back test towards this 50% fib we get there is your entry. So you could even sell a piece at 50%, the $50 cash secured puts here, and then plan to scale if we get down to 47, put on another piece down there if we get down there, or do it at 45. But I don't believe we get that. I think this holds. You get this kind of a push on drive 3. Most likely it breaks out and heads to the upside. We get our 3 and then our back test. So if you don't enter in this range here between around the 61.8 or any lower pull down, maybe to about 51.50, you're probably going to miss this push to the upside, is just my thought. All right, let's take a look at SPGP Global. This actually has popped on and off my view, in this range, because I thought we were going to break trend support because it was looking pretty heavy. Did not overshoot, so that's actually a bullish plus. So right now, our primary wave 3 is around 108.50. Then we get a shallow back test to trend support around 105.80. Then we push up to our 108. So I don't know that I would enter here. I would wait for my back test to about 98. But if I was holding here, I would definitely consider selling some covered calls around 110 or 115, because I don't think we get that push up there. But we could realize we're at all-time highs and we're really resisting the upside here. So that's my 2 cents. Let's take a look at OMFL. Now we're going to break out here just above this 55, this resistance band we have here. Nice breakout. It's held, back tested trend support. Can't ask for much better than that. The only thing that would really invalidate this for me is we broke below this 382. It would indicate that we probably are going to flush back down, because it does like to roll over, not aggressively, but consistently. So this leg peaks out up here, it probably will roll over. So sort of anticipate that. But right now our target for our intermediate wave 3 is around 62.41. Then we get a pretty deep back test down to about 54. So I would definitely insulate when we get up there, maybe with some covered calls would be the thought. All right, looking at Pacer Industrial, INDS. Now we should get a back test to about 23.6 fib, right around 40 bucks, 39.50 range. That's your spot, your next entry. Now just keep in mind, plan, drive 1, drive 2, drive 3 can overshoot. So usually it's about 50% of the way between drive 2 and drive 3. So that would give us a count somewhere around 37 bucks, 37.50 if it does overshoot. So just keep that in mind with your position size that, hey, maybe you want to scale here. Then we should look for our target after that. Will not invalidate or negate the upside. The only time that would occur is if we broke below our primary wave at 35. Excuse me, I've got the primary wave on the wrong line here. It would be down at 32 bucks. I'll have to adjust that. But that would be the only time it would invalidate the breakout. All right, looking at RWJ. Invesco S&P small cap, testing resistance here, rejected it on the second drive, sort of a double top at 46.36. As long as we hold this trend channel, I don't have a trend line here, I should, but as long as we hold that trend support, I think we're fine to the upside. Even if we come back and back test at 42.50, I think it's right at that line. I don't think it does though. Just looking at the volume, we've got some nice green candles. The bears are a little less enthusiastic as they've been on some of the last legs. So I think we're getting ready to break out here up towards our 48. Now in this scenario, just because we're so tight, $3.20 is not a lot of upside. It's up to you whether you want to chase that 48 bucks or wait till we get our 44 and then chase the 5 back up towards about 50. So that's your discretion there. Okay, it's your discretion always. So just language there. All right, so looking at trend support at 22.51, I think that holds. The only thing I don't like is how extended this flat is and how we're squeezing to some degree. The problem with an extended wedge is they can break either way. So we close below that 21.51, I'd be out. That would be where my stop. Outside of that, you should be accumulating any back test you want to add. I don't know that I would sell. Well, you could still sell some cash here that puts around 22.50 and you should be good. If you get filled at that spot, you need to make a decision on whether you're going to hold them. Obviously, if I haven't updated the chart at that point, we get that kind of play. Definitely ask for me on chat and I'll be glad to update it for you. But we're looking for a target for that 37.22 at this. All right, let's take a look at VPL. We held trend support pretty well. We got a little bit of an overshoot. Drive 1, drive 2, drive 3. We can always look for an overshoot. Nice. But notice how euphoric it was that it came off of there. So we're going to come in and we're going to this resistance band here. Now our intermediate wave 3 is right at 85 at the top side of that band. But I do expect some decent rejection there. That'll pull us down to about 81 bucks. And then we break out towards our 88. So structurally, sell some 75 cash secured puts or scale into common shares here and just keep adding a piece on the way down. And then we break out above this last wick up, obviously add a full position size on at that. All right, let's take a look at A1A. This is one of Kirk's favorites. I think we get a little back test down here. I think it's done up here to about 72. So, not quite $2 lower. Then we launch up for our primary wave 3 around 85. So that should be your spot to add. But any further dips, consider it a buying opportunity is my thought. But we're looking for that target wave 3 around 85.01. All right, mid-cap quality XMHQ. That's a tongue twister. Say that 10 times. All right, so we are flagging here big time. Above our B, I would make sure I have a full position on. If I don't, otherwise scale on any dips. You could sell some cash secured puts here, maybe around 100, just to earn some income on this. But once this 110 gets breached, if we get above there, whatever back test we get is going to be a launching pad to that 127. And we want to make sure we have a piece on that. I don't really get concerned to the downside till our primary wave 2 breaks down here on the low side. That's my 2 cents. That's what we have for this week, folks. Great trading. Until next time.